Good morning and welcome to today's edition of the London Session Open. Today is October 11th, 2019, and it's 7:37 a.m. in London when I'm recording this market update for you. Let's take a look at the markets, and we're going to begin with the Euro versus the USD, and we can see here how the price reached the first profit target, which is September 24th high, and could still have a bit more to go, and I think we could go maybe to 110.51, and at that point we would reach the inverse and the shoulders target, and then we would see what would happen. I personally think that maybe from these levels the market might reverse to turn lower again, maybe go down to 109.38, but for the short-term system that I use, which is this one here, the trend remains bullish for now, and I'll let you know when it turns bearish. But we need to take out whatever low is going to be created here at one point, I think. And this proves as a very valuable lesson for anyone that is new to the market. Once in a while I get a question, people ask, what do I think about that? Say the euro, right? Do I think it's going to go up or down? And in this case, as long as you're trading above the October 3rd low, then I didn't care too much, because it didn't matter how long time it would take for the price to go up. Some people would use what we call time stops, but that's a different story. The key point here is that as long as you traded above this low, which we did, then the trend would remain upwards. It could easily have stayed here for another week or so, but the trend would have been upwards in the very short term, and the price could still have reached that high, which it did. And that's the thing with technical analysis. You get a very good understanding of where price might go as long as certain levels are respected. The other thing is the timing, and the timing is extremely difficult. That's why I don't even bother to try to figure that out. I don't have like a weekly target where I think the price needs to go up or down. I only have the price levels, and I know as long as you trade above certain levels or below certain levels, we're gonna reach some other levels, and that is what I can do. I can't do the other thing, which is to figure out exactly when the market's gonna go up or down. Um, let's move along here. As for what people are gonna buy next, I think we can push this up a tiny bit like that to maybe 109.78, and then from here some people might look to buy. But unless you bought here over the last few weeks or beginning of the month, it's too late, I think, because if one would buy right now, we might make 35 pip. At the same time, you will look to risk 38 pip, if not more, because the stop loss will need to go down here. GBP USD on fire. So yesterday, what happened is that we have a jump here in price at 3 o'clock. The Prime Minister of Ireland and the Prime Minister of the UK had a joint statement. They were meeting, and they had a joint statement, and that caused the pound to rise, and it was a bit different than before. And as well, I think there was interview. I know there was an interview later with the PM from Ireland, and he said something in line with that he thinks it might be possible to broker a deal before before the Brexit deadline. And when you see those headlines, or when you see a sharp move, what I try to do is I try to go to, say, Twitter, because that's where most people publish stuff. As you know, there's always someone with a Bloomberg or Reuters platform that wants to have a lot of followers and likes. So what they do is that they will share their content. They will share content from Bloomberg and Reuters directly, so you can see a bit what's happening. And what I try to do is when I see the market moving aggressively into my sell zone, which this was, then you need to take a step back and ask the questions, well, why is price going upwards? You know, and if you can't really see it, but you can see the strength of the candles, which you could see over here, then you you need to take a step back. Well, not short. So that's what I would have done here. And just ignore this whole opportunity. Now looking at this today, the price traded above that trend defining level. Because, sorry, to go back to the other thing. Obviously, you look at the data, you look at what's coming out, and then you try to make an assessment if it's going to continue or not. And many times, you might think that, okay, actually it's gonna fade. But if you see those strong candles like this, it's a warning sign, and then you need to sort of wait for that move to end. And then alternatively, what you could do is you let it go as close as possible to the trend defining level and then pull the trigger. So you don't necessarily short at the very beginning of the sell zone. In either case, the market takes and it gives, and right now this very short-term trend has actually resumed to turn bullish. Now we're very close to the September 24th high, and a bit of a natural correction would be perfectly normal. You get the RSI overbought, but you don't even have to have the RSI. It's quite clear. I think this was the strongest one-day move in 7 months or something. Doesn't mean that the market can't continue to go a little bit higher, but I can tell you that the risk-reward ratio is not good at all. And if we take some Fibonacci on these levels, then maybe we'll go down to a level between the first and the 50% level, and then we'll see what happens. This market, because October 31st is, I think, yes, Saturday, October 19th, which is next the Saturday next week. At that point, they need to have some sort of a deal. Otherwise, PM Johnson needs to send a request for an extension. There's no deal by that time. It's going to be a situation where there will be an extension. Here, on that pullback, you need to be careful. But this is sort of a wide range. With the risk reward ratio is going to be favoring bullish positions. Dollar versus the Japanese yen. So stock markets are doing quite good over the last day or so, and that is pressuring the dollar yen. Technically though, we're still trading below the October 1st high, so there's no change in the outlook. As for Brent crude oils prices, so we talked about buying at 52.13 and buying on the dips here in articles and in morning updates, and it's looking good, and the market is not that far away from potentially reaching that midpoint level of 55.47, and around that level I think it's time to look to book profits. In the very short term now, the price was sort of capped. Actually, that was probably not the best. Maybe you can do something like that. The price was sort of capped by that red trend line, like that. You have some support down here. And if you take fibs from low to high, like that, and then I reckon that maybe at the 50% correction level, so that will give a second opportunity for people that didn't buy down here to buy, and then do like that. The stop was here, is now here, just below the low here at 51.38. So the first position greatly reduced the risk on that one. Nothing wrong booking better profit here as well. As you know, the market this year, they don't trend very well unless you're trading gold. And not even gold. Gold trades sideways for a month, then it has 4 weeks of strong action, and then goes back trading sideways for another month. Here is the gold price today. So for the last few days, I've been saying that I think this is going to go down. Went down the first time, it's now down the second time. We're going to reduce the trend defining level a tiny bit, but there's no change to the outlook here. I reckon we need a bit more. I think 1480, that will be a perfect opportunity to book profits on everything. And then we might go down to 1417, and then we'll see what happens. This is some sort of a wedge, which is a corrective move overall against this strong up. This is the S&P 500, and as you know, I've been bearish here over the last few days and weeks. The idea was for this to go down. It declined quite a lot, more than I thought it would decline. And then the idea was for the market to turn over from here. And then yesterday I said if we go back up to these levels, I think people are going to sell. But you can see here that this third time around, the market did not do what I wanted it to do. In fact, it went above my trend funding level and above the sell zone, so this would have been a loser. Now looking at this today, it looks to me that we have a bit of a bullish bias now to some extent. I think this is more neutral than before. And if you ignore that spike, you have a bit of a bullish bias like that. And it could be that around these levels, the market might look to get long again. And then do something like that. So this is something to keep an eye on. The alternative is that we just quietly break above this level and then slowly go like that. Because the market volatility is a bit special. It will be very volatile at one point, and then it goes back being slowly going up, as the stock markets usually do. See German DAX, fortunately we did not work out either. The market went down a bit and then it went up, and we're now above the trend funding level. And this market now, I think we need to be bullish if anything. This level would go down here somewhere, but actually let's just leave this for a few days and see what's gonna happen. Most likely the market will still be capped by these highs, and maybe just go down again. If I had a choice in this, I mean, it looks like we have a lot of space here missing. The alternative actually wouldn't be counted. It looks a tiny bit like a head and shoulder to the left, right shoulder and head, but we still need to break these highs here before things become really interesting. So let's see what happens over the next few days. Okay, guys, thanks so much for watching, and if you have any questions, just let me know. Thank you.